All right, everybody, welcome to our online event for first-time buyers here in Scotland. We are excited to have you along and looking forward to having you all join in and learn more about being a first-time buyer here in Scotland. We are joined tonight by our panel of experts. We've got Stephanie Cormack from Cara Mortgage Services. So hi, Steph. We've got Shawn Wood, who is the head of Conveyancing with Watermans Legal, and then myself. Unfortunately, you will have to hear me speak again. My name is Tzana Webster, and I'm the head of property sales here at Watermans Legal. Our online buyer seminar will last probably about 1 hour. At the end of the event, we will have time for a Q&A. So as this is live streaming on our YouTube channel, please do feel free to use the comment section to ask any questions. Request information. You can direct your questions to any of the individual speakers. And again, we will have everything transcribed onto a follow-up blog later. And we will also send out an email to everybody who registered for the event with a copy of the slides and also a link to the YouTube again in case you've missed it. So we hope that this information is helpful and we look forward to obviously having you along. I'm just going to get set up on a screen share now. So sorry about this, guys. We're having to go back a little bit. So again, just welcome along to everybody who is here. We just really want to just kind of thank you again for joining us. Again, we are just really here to be as transparent and as honest as possible in relation to, buying a property and buying your first home in Scotland. We know that this entire process is so exciting, but it can also be really daunting. You don't really do sales and purchases a lot in your lifetime. Some people do make it a kind of a career, or just always love that opportunity of being a little bit of a nomad and moving around. But other people really only do this sometimes maybe 2, maybe 3 times in their lifetime. So it is always ever changing and there's a lot going on. So it is really a good idea to have a refresher. So this is really what we're here to provide you with. Again, just recapping our panel of speakers: Stephanie Cormack, who's a senior mortgage and protection advisor at Cara Mortgage Services; Shawn Wood, the head of conveyancing at Watermans Legal; and myself, I'm Tzana Webster, the head of property sales at Watermans Legal. We've got a quick summary of the agenda, and we'll let you take it away, Steph.
Thanks for joining, everyone. Welcome. So the main things that I want to cover today is just the kind of process of applying for your first mortgage, what's involved, what steps you must take. So as Tzana said, I'm Stephanie Cormack, working with Cara Mortgage Services. So I've been in financial services now for about 15 years, so a long time and a lot of experience with different types of purchases. So the first thing that we want to look to do is cover off what is the actual process. So the first thing that we would strongly advise to do is make sure that you get your mortgage agreement in principle, also known as a decision in principle. It's exactly the same thing. So the decision in principle is basically a strong indication from a bank or building society that they're willing to lend a certain amount of money to you. That's calculated on your income. If you have any unsecured debts that are going out, that's all gets factored into how much you can afford. So once we can obviously obtain the agreement in principle, the maximum mortgage that's available to you, we can then work out exactly what your budget is. Because it may be that with you being a first-time buyer, that the maximum mortgage is maybe too big to start off with, and you may not have enough of a deposit to support that. But I'll come on in a moment to what deposits are. But the main thing is working out your budget. What do you want to buy? Make sure that you've got enough kind of savings that will cover the deposit, as well as the professional fees that you'll have as well. So that's for the likes of your solicitor's costs, furniture, just the overall expenses of actually moving and buying your first property. So that's something that I would be able to help guide you through and work out exactly what is a suitable budget. The next step that you then want to do is view properties, view lots of different properties to get an idea of exactly what you're looking for. Your first property is unlikely going to be your forever home, but still, the very important first purchase that you're ever going to make. Now, once you've viewed some properties and you've come across one that you really like, it's at that point that you need to speak to your solicitor at Watermans Legal. And they'll then take you through the process of making your first offer. And Shawn will obviously explain exactly what that means in a moment. Then once your offer is accepted, then get back in touch with me, and then I'll start to prepare the full mortgage application, and then we can start to talk about product specifics. So, types of mortgages. Now, I've got access to over 12,000 different mortgage products from over 90 lenders. So that's one of the main benefits of using a broker like myself, is that if you go to your bank or building society, they're only going to be able to give you advice on the products that they have access to, which is a very limited number of products. Whereas I've got access to over 90 different lenders. So you've got a good use of the basically products that represent the whole of the market. Now, the difference between the types of mortgages is typically a lot of first-time buyers, they do like the security of having a fixed rate, and that's exactly how it sounds. Your interest rate is fixed for a set period of time, and that could be 2, 3, 5, or even up to 10 years. So depending on what your preferences are, your longer-term goals, you can fix your mortgage interest rate for that period of time and know exactly what your monthly payments are going to be. Then the other types of mortgages that there are is there's like a tracker mortgage. Now, usually that's linked to the Bank of England base rate. Now, if the base rate was to change, and that could go up or go down, then it does mean that your interest rate could change as well. So there's less stability with that, but potentially, a little bit of good luck if the interest rates do drop. Now, what would happen is after you've had, your fixed term agreement or your tracker mortgage for, that introductory period, the bank or building society that your mortgage is with will automatically change you to an SVR interest rate, which means a standard variable rate. Now, currently that could be anywhere between sort of, at the moment, 3.59%. So it could mean that your payments are increased at the end of your fixed term. So that's important that at that point, or even a few months before that, we recommend maybe 6 months, that we start to look at different deals after your term, your initial term has finished. Now, the other types of mortgages, along with that product specifics, is interest-only mortgages. And again, that's exactly how it sounds. You're paying the interest only each month. So if you take a mortgage of £150,000, you'll only pay the interest for the entire term of that mortgage, but then once that term has finished, you're still due the bank or building society that £150,000 at the end of your term. A repayment mortgage gives you a little bit more certainty that the monthly payment will be made up of the capital balance partly and part interest. So that means that you're reducing your mortgage balance month on month as you make repayments. So again, you've got that certainty that at the end of your mortgage term, you don't owe the bank or building society that you're borrowed from any money at the end of that. So deposits and what schemes are available, what help can first-time buyers get? So at the moment, we are seeing a lot more lenders coming back to the market at 95%. So what that means is that you need to have a 5% cash deposit from either your own savings or a gift from family. Now, in order to qualify for the 95%, it's very important and vital that you do have an up-to-date credit score that's keeping your monthly payments up to date. But I'll go into a little bit more detail of that in a moment. So 5% is the minimum deposit that's required. Obviously, we would encourage you, the bigger the deposit, the less you need to borrow, therefore you're paying less interest back to the bank. Now, the scheme that is available at the moment is the government lift scheme. So that is designed for first-time buyers, where the government will gift up to a 40% equity deposit. So what that means is that the government will help you out to boost the existing 5% deposit that you have, and increase that potentially up to 40%. The government will have whichever stake that you want to, the government to have, whether that is the maximum 40% or it could be 10%, they will have that equity stake within your property. So you don't make any repayments back to the government within the time that you've got the equity deposit. The government will only seek to claim that back if you ever sell the property. They'll want the percentage of the equity that you've borrowed. They'll want that back whenever you sell. So with the way that house prices are going, there is potential that if you were to borrow, let's say £10,000 from the government, that maybe in 10 or 15 years time, if you're selling that property, that initial £10,000 that you've borrowed, it could be maybe double. It depends on what the property price is at that moment in time. So main things to point out with this lift scheme is that the government will dictate the maximum price that you can apply for depending on the size of the property. So for example, if you're buying in the Edinburgh Council area, they will say that you can't buy a property with a 1-bedroom of anything more than 125,000. It's fine if you can find a 1-bedroom property for less than that, but it just can't be above the 125. Then you'll see 2 bedrooms, you get a bigger amount threshold, which is 155. Your 3 beds, you're looking at 190,000 maximum price, 4 beds 255, and then 5 bedrooms 375. So there is a link there that you can use to see in whichever area in Scotland that you're looking to buy. It will give you a guide on what the thresholds are for that area. Now, in order to apply, you need to make sure that you've got your 5% deposit and that you found a property and had your offer accepted. But we can take some questions at the end on exactly more detail on how that scheme works, or we can catch up privately. So what documents do you need to provide? It's not a massive amount of information. It's things that you'll already have access to, and electronic copies are absolutely fine. So when we apply for the mortgage, you will need to provide photographic ID, so typically passport and or driving licence. You'll need to provide your 3 months bank statements for all the accounts that you hold. So that's savings accounts and current accounts, and even if you've got business accounts as well. So we need to see the last 3 months. Then what we'll need, if you're employed, just 3 months latest pay slips. If you're self-employed, then ideally we're looking to see the last 3 years of SA 302 documents, which are also known as tax calculations, and the corresponding tax year overviews. Now, it is possible that for first-time buyers that we may be able to seek less than that. So if perhaps you've only been trading for maybe 2 years, then there is the potential for that. But ideally, we do like to see the 3 years of history if you're self-employed. Now, if you're getting a gifted deposit from family, then we'll need proof of where that's come from. So that's typically just a letter to confirm that, mum, dad, brother, sister, granny, granddad, they're going to gift you X amount of pounds towards your deposit. And also a copy of your credit report. So again, there's a link here that we can send out for a credit report, which will combine multiple credit reference agencies. So what that means is it gives you a good overview of exactly your whole credit scoring with the different agencies. And that is why it is absolutely vital that you do keep up with repayments on mobile phones, gas and electric, every kind of commitment that you've got. As long as you keep that up to date, then you shouldn't have an issue with applying for 95% mortgages. Even if you have had some blips with your credit in the past, you've maybe missed a payment on a credit card or a loan, it's not impossible to still apply for a mortgage, but it may mean that you're going to have to put in a slightly bigger deposit than not just the 5%. So useful information, keep your credit rating up to date, make sure that you keep on top of it. There's multiple agencies that you can become members with to check your credit report on a monthly basis. Save as much as you can. Speak to your bank or building society. They may have options for you to save tax-free. Now, we do have a online mortgage calculator, which you can use on the Cara Mortgage Services website. Again, there'll be links there that you can use. You can have a play about with that. It's not going to credit score you. It'll just give you a good idea on what your income is, what your outgoings are. It'll give you an indication of what you may be able to borrow. Also ask questions. You know, we don't expect you to know the answers to everything, especially with this being the first time that you're going through this process. So ask as many questions as possible, and just keep in touch with your broker so that we can make sure that you're following the right steps, you're not leaving anything unknown, and we can obviously make sure that your agreement in principle is kept up to date as well. The agreement in principles are only valid for 3 months, but provided that there's no change in your circumstances, we can always refresh that for you. So if there's questions, we'll get to them at the end. Thank you.
Oh, that was really good stuff. Thank you so much. And again, we've got Steph's contact details on here. We will also make sure to send everything across to you guys as well. And, you know, again, please feel free, if you are watching on YouTube at the moment, use the comments section to ask any questions. We will take it away, Shawn.
Thank you. Yeah, so thanks everyone for joining us tonight, particularly on such a scorcher of a day, but I won't keep you too long and you get back to the barbecues or whatever else you've got planned tonight. So I'm going to talk you through the purchase process from the legal side, really. I'll maybe touch on some stuff that Steph mentioned as well, which is quite useful. So the step-by-step guide in buying a first property, you'll see at number 1, kind of what Steph said earlier, contact her first. That is certainly the way to get started. There's no point in putting in offers when you don't know what your budget is. You don't want to put in an offer, have it accepted, and then realise that you can't afford it. So certainly get the mortgage agreement sorted, in principle anyway, to begin with. At the same time, you want to try and set yourself up with a solicitor as well. The reason for that is that solicitors and brokers work together, and they're quite closely connected. So you want to get both of these firms on side at the outset before you begin your property search. When you're looking at properties, the best places to look are the ESPC and Rightmove. The ESPC is really good in terms of they have an alert system, so you can put in your criteria that you're looking for. So whether it's a 1-bed flat, 2-bed flat, you can put in a number of areas that you're looking to buy in as well, and obviously your budget. And as soon as a property comes on the market that meets your criteria, you get a notification. So that's quite a good way to look at properties. But yeah, you simply can't look at enough properties. Get out and about, view as many as you can. Obviously, with COVID, it restricts when you can view things, but most estate agents now are doing these video tours, which are excellent, so you can feel like you're in the property from the comfort of your own house, which is great. I've mentioned their home reports as well. Home reports are really important. So every property sold, or every property marketed in Scotland to start with, must have a home report. And the home report marks every aspect of the property with a 1, a 2, or a 3. And a 1 means that the aspect of the property is in good condition. A 2 means it's okay, but might need some upgrading in the future. And there is also a 3, which means that there might be some urgent works being carried out on the property with regards to, it could be dampness, could be a roof repair, something along those lines. So you want to avoid properties that have a 3 in their home report, or at least find out what it relates to and how much it will cost for that repair to take place. The home report also will reveal the valuation of the property as well, which is obviously useful. The market's so strong in Scotland at the moment. Not a lot is selling for below valuation. So, when you see a home report valuation of say 150, you might think that you can get it at 150. At the moment, that's certainly not the trend, and you might be looking to spend a little bit more than that in order to buy the property. And point 6 is offer agreed. So when an offer is accepted, then we work with you and your broker to take it forward and work on the next steps, but we'll get onto that as we progress through this presentation. So the next slide, it relates to how you offer on a property. So that's where the solicitor comes in. The solicitor will submit the offer on your behalf. And we've just noted there the information that's useful for us to have before we submit the offer. So that's the full name of the buyer, your full name, your contact information. We'd like to know as early as possible where the deposit comes from. We'll get onto the reasons why later on, but it relates to money laundering. So it might be a gift from a relative, it could be inheritance, it could be savings. We'll want to know the figure you want to put forward in the offer, the estimated date of entry, and any conditions that you might want to include in the offer. And we've noted there, such as a roof report or a damp or timber specialist report. Some people like to put that in the offer if the home report raises some concerns, or if you have any of your own concerns that maybe the home report is not picked up on. And how that would work in practice would be that once the offer is accepted, you then have the opportunity to instruct your own report to be carried out at your own expense. And obviously, if there's something in that report that's not to your satisfaction, then you can withdraw completely without any penalty, or we can negotiate on the price. The other point that we've noted there is about additional furniture as well. Generally, white goods are included, but not always. So it's important to have a look at the sales particulars. It'll be on the listing or it might be on the schedule, but that will tell you exactly what is included in the price. And we can add to that as well. If there's a particular item of furniture that you like, we can ask that be included within the price too. What should you offer? So yeah, there's three kind of main ways that people market their property for sale: fixed price, offers over, and offers around. I'll probably start at offers around because it's not that common, to be honest, at the moment. We do see it sometimes. It's generally not that helpful, to be honest. And it might be offers around £100,000, might be valued at 105, but that probably means that they would maybe be open to accepting an offer below the valuation. Fixed price is probably something that you'll be aware of. It's self-explanatory in the sense that if it's fixed price at 200,000, it means that they want £200,000 for the property. At the moment, because the market's so strong, we're not seeing too many fixed price properties. If you do see a fixed price property, then it's basically first come, first served. So you want to get in quick, otherwise you could miss out. On the flip side, I always ask myself, if I see one that's fixed price, why is it fixed price? Is it because they can't shift it? Is it because it's perhaps been overvalued? Is there something wrong with it? Why can't they shift it? There could be perfectly innocent explanations to that, in the sense that somebody might just want a quick sale to get rid of the property, or it might be that they've actually agreed to buy something else, but they can't buy until they have the money from the sale. They might be buying a new build and the pressure's on to get rid of their own one. So, there could be a good reason why a property is fixed price, but it's always good to seek advice before you jump in with an offer, I would say. And that's where we come in. We can help you work out why it is fixed price and what the sales have been like in that area. Offers over is the most common way of marketing a property. So basically you'll see it down on the SPC or whatever as offers over, say 115,000. It's probably going to be valued at 120 or 125. It's a marketing technique that Tzana will probably touch on later. And it's basically to lure people in, to get them interested in the property. They're not going to accept an offer below the valuation, despite the offers over being a figure below the valuation. But it's a way to entice people in, to generate interest. And they'll still be looking for above the home report figure. So try not to be too deceived when you see offers over 115. They're still probably looking for the 120, the 125, or whatever the valuation might be. How much over home report value should I offer? It's probably the most commonly asked question that we hear from when people are looking to buy a property. It's difficult to advise. It's very much property specific. and depends on the level of interest currently on the property. So if they've had 20 odd viewers, they've got maybe 10 people who have noted interest, then it's likely that the property is going to rocket above the home report. 10% is generally the figure that people look to when they're thinking about offering above valuation. To be honest, it could be less than that, it could be more than that. It is very property specific, so that's why you get in touch with us and we could do all that research for you. We can look at the home reports, we can look at the level of interest, and we can look at recent sales in the area to advise on what is the right offer to put forward. You don't want to underpay and miss out if someone's higher than you. You don't want to overpay either and kick yourself for that. So it's important to find a balance and put in an offer that you're comfortable with. A closing date is the seller's dream, really. That's what I describe it as. Sellers love closing dates, and the reason they love closing dates is because it pushes up the sale price generally. So a closing date is basically when a seller has generated enough interest and they will set a date and a time for people who are interested to submit their best offer. You get one shot at it. So they'll say, Friday at noon is the closing date. So everybody then puts their offer in shortly before 12 on that day. And usually the seller will go with the best offer. There might be conditions attached to that they might not like. It might be subject to sale or subject to too many conditions, but generally they'll go with the best offer if it suits them. So yeah, you get one chance to put in an offer. You have no idea what other people might offer. So people do sometimes push the boat out and put forward the best offer. Again, if closing dates are set, then we can advise you on what to offer on those closing dates. But the trend is, at the moment, everything pretty much is going to a closing date, unfortunately. It's quite difficult to buy without a closing date at the moment. So there will become a time when your offer is accepted. Some people, it takes a while for them to get the offer accepted. It might take 4 or 5 offers, might take 10 offers. But I've had a few this week, first-time buyers who have been successful with the first offer. So it can happen. It really can. Once your offer is accepted, that's when you go back to Steph, like she said, your mortgage advisor or your lender, to let them know you've been successful. That will then allow them to action the mortgage side of things. From a legal point of view, obviously the written offer has been submitted, and then the conveyancing process begins. I'm not going to kind of go into the full conveyancing process right now. It'll probably send you all to sleep, but the basic point is that at that point we'll receive a written qualified acceptance from the seller, which is them saying, yes, we accept the offer, and they might want to delete some clauses at that point in the contract. At the same time, we'll receive title deeds, reports in relation to the property, alterations documents, anything that's relevant, and then we'll prepare our report on the title, which we'll eventually send out to you, and we'll go through it together to make sure you're happy with boundaries of the property, what the title would say, and all that kind of thing. Date of entry. So date of entry is the day you get keys. We'll touch on that in the next slide, but that's usually around 6 to 8 weeks from when the offer is submitted and accepted. It can be longer. You might want it to be longer for your purposes. The seller might prefer a longer date of entry to suit them if they're going to buy something else. So you want the chain to kind of work so that everyone's happy. If you're getting a mortgage, then that's usually the slowest part. Steph might disagree, but sometimes the lenders can take a bit of time to get their loan papers out. So that can dictate the timeline really, but generally you're looking at a 6 to 8 week period from date of offer to you getting the keys. So the date of entry is the completion date, it's the settlement date, it's the date you get the keys. It's called a number of things. Before the date of entry, we will send you an account showing you how much we need in our bank account in order to pay the purchase price to the selling solicitor on the date of entry. So we'll give you plenty of notice so you can tee up the transfer. At that point, you'll send us your deposit funds, the legal fees, registration dues, and any tax that might be payable. And again, we'll talk about tax later on. The date of entry is the day you get the keys, as I said, and you'll also get the title deed in your favour, which will then be registered, and that will form the new title deed that will be in your name. In return, the seller receives your money. So it's a fair deal, I think. Keys are usually released around lunchtime. Not always, but we try and get them done as early as possible on the Friday. It's usually a Friday settlement date, not always. And then when keys can be collected, once we've fully settled the transaction, we'll give you a call. You can pick up the keys at that point. So we're now going to talk about legal jargon. The profession is full of jargon. I'm sorry about that, but it is. At Watermans Legal, we do try to offer straightforward advice and to break down the jargon as much as possible. I don't think you really need to know the full jargon that sometimes you can be bogged down with. So we'll try and keep it as simple and straightforward as possible. I think the process is daunting enough without having to deal with legal jargon. But let's go through them now. So the first one is a note of interest. Basically what that is if you like a property, you probably viewed it at that point and you're quite keen on it, you're maybe not quite ready to put forward the offer yet because you're weighing things up, or maybe looking at other properties or working on the funding. If that's the case, then note of interest is the perfect thing to do. And all it means is that you contact me and I'll contact the selling agent to give them your details and to formalise a note of interest. So once we've noted interest, it means that you're not committed to buying the property or anything like that. You're not committed to even putting forward an offer. It just means that the seller will keep you up to date should anything happen. So they might receive an offer and realise that they've got your note of interest sitting there. So what they might do is give you an opportunity to put forward your offer at that stage. It's kind of in their interest to do that because a little bit of competition should help the seller in the end. If they do generate a number of people who have noted interest, then that's when they'll set the closing date like we spoke about before. So noting interest is quite important because if a closing date is set, then we'll all be alerted to when that closing date is going to be. Can you note interest in more than one property? Yes is the answer. We wouldn't advise you to note interest in a large number of properties. Try and keep it to a select few that you are really keen on. And there's no charge to note interest at all. There's no charge to submit offers either. So we can keep offering until you are successful, and the fixed fee applies. So yeah, no charge to note interest. Missives. What are missives is another frequently asked question. Missives are simply a series of letters which form a legal contract. So the first missive is effectively the offer that we submit on your behalf. The other side, the seller will come back with a qualified acceptance, which is a written acceptance to the offer with perhaps some changes. And then once we're ready to conclude the contract and bind those parties to a legally binding contract, that's when we would issue a concluding missive. So yeah, these three letters, the offer, the acceptance, and the concluding letter form missives. That's all it is. Missives are signed by the solicitor, so you don't need to sign the missive at all. We sign it on your behalf, and obviously we send a draft before we actually send it out to make sure you're happy with the missive, because it's you that will be entering into a legally binding contract, so you have to be aware of what it means and what the consequences are of entering into the contract. When missives are concluded, this is when the contract is legally binding on you and the seller. That's the point where you can't back out of the contract. You can't amend the terms without financial penalties. So it's important that you understand what's going on at that stage, and your solicitor will go through everything with you. And just as another point as well, the contract won't be concluded until the loan papers are issued by the lender. Once the loan papers are issued by the lender, that means that you're guaranteed the funding from them. And only at that stage will we allow the contract to become concluded. And obviously that means that you can't be in a legally binding contract without having the money to pay for it, to pay for the purchase price. So that's probably the most important thing. If an offer goes in and is accepted, and something does go wrong with the funding, which is quite rare, but I suppose it can happen, then it's important to remember that as long as the missives are not concluded, then you're not bound to buy, and you will not be in breach of a contract. So if you can't get a mortgage or it falls through before missives are concluded, you can walk away from the contract without any penalty. The next slide is the tax that I mentioned earlier. It's LBTT, Land and Buildings Transaction Tax. It's stamp duty is what it is. We renamed it a few years ago in Scotland when Revenue Scotland had the powers to form our own tax system in relation to property tax. And yeah, it's known as LBTT, but it's probably more commonly known to people as stamp duty. For a first-time buyer, which is what tonight's all about, you don't pay any stamp duty for purchases up to £175,000. So you can buy up to 175 and no tax is payable by you. In normal circumstances for second, third time buyers or whatever, the threshold is £145,000. So the tax is payable anything above 145 if you're not a first time buyer. You can see the table there that shows you the tax rate. But thankfully, you don't have to do the sums yourself. There is a very good calculator on the Revenue Scotland website, which is on the next slide. So yeah, that's your go-to link right there, and I use that on a daily basis because there's no way I'm working out 5% and 2% of purchase prices. So yeah, that's what to use, that calculator. LBTT is paid on the date of entry, so that'll come to us with your deposit, legal fees, and registration dues. And then once the purchase has gone through, we will pay the tax on your behalf to Revenue Scotland. What if your amount changes in the offer? Yes, so basically if we give you a quotation for £150,000 and you end up buying at 185 because you might be using a government scheme that Steph talked about earlier, gives you more money in your pocket effectively, then once the offer's been accepted, we'll send you the revised quotation just to show you the amended outlays. The outlays that do tend to change relate to LBTT and registration dues because they're price dependent. But we'll get onto that on the next slide. How much does it cost to buy a property? So this is just a very quick overview of the outlays that you'll have to pay, as well as the purchase price on the date of entry. Solicitors, legal conveyancing costs, on average about £650 plus VAT to around £950 plus VAT, depending on the purchase price. Kind of standard across the board. But contact us for a quotation, and I can see that a number of you already have, which is great. If you're using one of the government schemes, such as, well, Help to Buy is kind of not used at the moment, neither is First Home Fund because they've run out of the funding. But Lift Scheme, or if any other of these old schemes come back, then there is an additional legal fee on top of that as well. Just because there's more work required from our end. I think there's about two further agreements to prepare and an additional security as well. And the government obviously instruct their own legal team as well. So there's 3 lawyers involved. There's the seller's lawyers, there's the buyer's lawyers, and then the law firm acting on behalf of the government. So yeah, it gets a bit convoluted, but we'll always get there in the end. In terms of outlays, we spoke about the tax that might be payable depending on the purchase price. There's an advance notice charge of £20, which is payable to Registers of Scotland. Again, I won't bore you with the finer points of that, but the banks sometimes insist on having that placed, registered at Registers of Scotland, and it protects their position when their legal charge is registered at the point of purchase. Most firms use online anti-money laundering checks. The Law Society really want us to use these as much as possible, and it just verifies ID, passport, also your proof of address, as well as bank statements. So there's probably going to be an admin charge for that wherever you go. Registration dues and disposition dues. So the disposition is the title, becomes your title deed. It's called a disposition. That gets registered at the Registers of Scotland, and they have a fee table and it really just depends on the purchase price to what the registration charge will be. The bank's security will be registered as well, because the bank will want to ensure that they're protected, and it's £80 for their charge to be registered. If you are using one of the purchase schemes like Help to Buy, Lift, etc., then generally the additional registration just comes to £180, which are payable to Registers of Scotland. Again, contact us for a quotation, and we'll outline exactly what the position is in terms of outlays and fees to suit your circumstances. New builds are obviously popular for first-time buyers. The good thing about buying a new build at the moment is that you don't really have a competition. You're not on a bidding war with anybody. You put your reservation fee down and that's you pretty much good to go. So there's plenty of positives for buying a new build. There's obviously maybe some negatives as well. But yeah, especially in Edinburgh where we are, house prices are only going one way and they're very competitive. So buying a new build eliminates the competition completely. There are some additional costs though when you buy a new build from a legal point of view. Usually a seller, if you're buying what we'd maybe call a second-hand house, a seller would pay for these search dues that we have outlined there, but the builder won't pay for these costs. Probably the reason is that they'll have maybe a couple of hundred sites, a couple of hundred plots on development, and obviously they wouldn't want to fork out these costs times 200 or whatever it is on the site. So it's up to the buyer. They pass the cost on to the buyer. When you are looking at new builds, we've spoken about there about the extras that you might be able to get. So yeah, push for as much as possible. Some people get their tax paid for them if tax is payable. Some get additional extras, washing machines, dishwashers, fences in the garden, turf, etc. Just go in and ask. If you don't ask, you don't get. That's the key thing there. If they're struggling to shift some plots, which might be the case as we move forward due to the lack of Help to Buy and lack of First Home Fund, which I think builders really relied on quite a bit, you might be able to get more than usual. So certainly ask the question when you're about to reserve a new build. In terms of missives, the process is slightly different when you're buying a new build. The builders will have their standard offer to sell, so it's not an offer to purchase from us, and they'll want the missives to be concluded as soon as possible. The reason for that is they just want certainty. So I suppose the key thing when you're buying a new build is to make sure that your broker is lined up and that you're in a position to put the offer forward, knowing that the mortgage is pretty much guaranteed, because the builder will want a quick turnaround and we won't want to conclude missives until the loan papers are here. So that's quite important. When missives are concluded with a new build, they will also want a deposit. It's usually about 10% of the purchase price. So you need to make sure you have that to hand as well. And then the rest is payable as at the date of entry, which, as you'll know, with a new build, it could be 6 months, could be 8 months, could even be 12 months. As we touched on there, there's no certainty on date of entry. So that can be a downside for people. We would make sure that there was a long stop date inserted into the missives for a new build, which would give you an opportunity to withdraw from the contract without penalty if the builder delayed too much from the anticipated date of entry. And that's something else that we can discuss if you are in the market for a new build. But yeah, that will allow you to withdraw if they didn't stick to their end of the bargain, essentially. I think the final point for me is, it's money laundering, unfortunately. I don't know why we're ending on such a negative note, but we're going to talk about money laundering for the last slide. So yeah, if you're getting money from a friend or a relative, or you just seem to have a healthy amount of savings, then we'll need to ask you where that money comes from. It's not a case of us being nosy or intrusive or anything like that, but the Law Society ensure that we have everything in our file that we need to have to prove that we've investigated the source of the money. So if you are receiving money from a third party, we will need to do our ID checks on them. So that'll be, getting their photo ID, getting their proof of address and bank statements to show where the money comes from. If it's something like £10,000, then that's okay for savings. If you're looking at something 20, 30, 50,000 or whatever, then we might need to ask some more questions. The more evidence you can have at the early stage is the best for us, and it means we're not running around trying to sort everything out the last minute. So yeah, it could be inheritance, it could be from a family member's sale of a property, it could be from regular earnings and savings. So all these things can be vouched quite easily through, it could be from wage slips, it could be from a legal letter, a legal email or whatever showing a sale of a property or inheritance. It could be proof of investment or something like that. But we can have a chat about that when the time comes. And obviously everyone's probably in a different boat when it comes to where money might come from. And if you're borrowing money from a relative who lives abroad, then there might be further checks to be done in terms of ID and money laundering as well. But yeah, it's best to get that done at the earliest stage possible. I think that's all I really need to talk about in terms of buying a property from a legal point of view. It was certainly a whirlwind stop of the conveyancing process, whirlwind tour rather. But yeah, hopefully that answers a few questions. And if you have any more, just give me a call on that number there, send me an email, and yeah, we'll be delighted to hear from you. Thank you.
Awesome. Thank you, Shawn. That's fab. What I will do as well, if you want to put yourself on mute, Shawn, from that. So I'm Tzana. I'm, again, head of the estate agency here. I feel like I get the funnest part of this. Yeah, and everybody else gets more process orientated. So that's their conversations. Really, what I'm going to talk about is kind of the tips of the trade and giving you guys more information that may be helpful for, yeah, making sure that you can secure your home and get into your dream property. So I'll obviously touch a little bit on what Steph had said and what Shawn's done. And please keep using the question and answers because some of them have been really good and I'm excited about me finishing up quickly and then getting onto it. So I don't know if you guys follow our socials. I kind of posted this. I think this is a really big one and I kind of laugh about it is, you know, if you're still renting, if cauliflower can become pizza, then somehow you guys can become a homeowner. And I think one of the biggest things is really, even if you guys don't know if you are able to buy a property, touch base with the, you know, touch base with Steph, have a chat, you know, find out really that's what they're there for, is they're there to kind of help you. The mortgage advisors, they're there to kind of work out quickly with you. It sometimes only takes a couple of hours to say, okay, you have this much in savings. Okay, this roughly, what do you think that, you know, you can afford or you would want to pay as your mortgage payment? What are you currently paying in rent at the moment? Let's work out these figures. I think you'd be really surprised as to actually how much, you know, how much that you're kind of wasting away by paying, because you're actually, when you're renting a property, you're paying somebody else's mortgage and not your own. So I think that that's always really important to know. So again, if I can stress anything by coming out and finishing this conversation, it is really to get in touch with the mortgage advisor, find out the affordability first, and just work out. I think you would be really surprised. So again, we are still, although we're making positive strides to getting back to what life was like before lockdown and before the word COVID was even kind of in our vocabulary, or coronavirus. You know, I think it's important that we need to remember that we are still able to move. We are still able to view homes. The property market has not stopped. It actually, during lockdown last year, surprisingly, it didn't stop even then. So many buyers and sellers were willing, and with agents still open, we were able to figure out how to make viewings and offers and things happen. So everything was done virtually. So we started innovating, doing video call viewings such as WhatsApp, FaceTime, going on Zoom. I was even hosting Zoom open viewings where that was just insane. But, you know, we were doing a Sunday at 2 o'clock on Zoom. And I think the most I had at one point was I had 33 people tune into a Zoom open viewing. And that was just phenomenal. So really what we're going into here about the coronavirus guidance on moving home, all home moves are still permitted, and they have been permitted since phase 2 opened up for the Scottish property market the 29th of June, 2020. So people can move home in all protection levels and to and from areas, even within different levels. And you can also carry out activities in connection with moving home, and this includes viewing a property. So even if you are from Glasgow wanting to come through to Edinburgh, or vice versa, you're from Edinburgh, you're wanting to go up to Perth to view a property, get in touch. You are allowed to do this. What I would recommend, even with some of the relaxation of the kind of COVID restrictions, always just make sure that you have everything booked in advance, that you have all your documentation with you, that you put a note of the viewing appointment in your diary, and that you've got a copy of a confirmation email just in case you are stopped and you have a valid reason to kind of be out. So the Scottish government is encouraging that you do property viewings virtually first. So many of the agents are organizing to have these 360 virtual video tours, a Matterport tour. They're also doing long form walkthrough videos or glide through video. I know here at Watermans Legal, we've been quite innovative organizing for Facebook Live virtual viewings, where we host this video on our Facebook page, and then we also upload it to Zoom thereafter. So take advantage of that. Have that as kind of almost equivalent of you know, viewing through and scrolling through the property photographs online and viewing the home report. Because if you see that, you can really get an idea and a feel for the area and the type of property it is, even sometimes even seeing the room sizes. So I would definitely take advantage of that. When you're, you know, the biggest thing is start viewing properties. I always say, you know, I actually get the fun job that I get to do some of the viewings, and I get to host them for some of my clients. So if I'm ever doing viewings, I get to meet you all. And this is the exciting part for me. I love to see this kind of entry level of this exciting moment in your life. I tell people all the time, viewing properties is almost like you're dating. You have to actually view a few to figure out what you like and don't like. And then you start making your list of must-haves, or I'm not really bothered about that, or this must be the area. So definitely go and view properties. If you like a certain area, go and view it at different times of the day or different times of the week, especially as we are getting out of lockdown restrictions. You'll start noticing that traffic may be picking up. So these are some of the tips and tricks of the trade, is viewing on, you know, just after rush hour at 5:30, 6 o'clock on a weekday, or go along on a Sunday afternoon. If you live near a football stadium, unfortunately, you know, go and check it out when it's near game time to see if there's not private parking, how difficult is it going to be for you to park there? These are all little things that you should definitely be checking out. Go and visit the available property web portals to search. So obviously, depending on your area, here in Edinburgh, we are very centric on the Edinburgh Solicitor Property Centre, or the ESPC. Other areas throughout Scotland have their various solicitor property centres, such as ASPC up in Aberdeen. You've got your BSPC down in the borders. So you've got these other areas that you can kind of view the properties on. You also have Rightmove and Zoopla. There's a new website that's just came out called Boomin. So definitely get on and have a look at this. Sign up to be registered for each of those property portal property alerts, but also get in touch with individual agents, like solicitor estate agents, and ask to be registered for their buyers list as well. It is going to be difficult because, especially if you are looking, there is going to be tons of emails and that are coming into your email account. So it's just helpful always to make sure that you're getting double ups in case you miss it or you forget. And again, try to be virtually first if you can. And if you do really like it, get in touch and arrange a private in-person viewing. So that's a big thing that's really changed since lockdown happened, is there are no longer any open days or open viewings. So traditionally you would have seen a kind of Thursday evening or Sunday afternoon. That stopped because the viewings are needing to be done individually, just to ensure to minimize the risk for transmitting the virus. So get your viewing booked in as a private in-person viewing, and you know, you should definitely get out there and go and view. So I've got a few tips here. One of the things is, you know, as Steph and Shawn picked out, is work out what your budget is and stick to your budget. I think one of the things that a lot of people get caught up in is having to offer overvaluation, but not yet totally realizing that your mortgage will only allow you to borrow up to what the value is of the property, the value being what is stated on the home report. So if you are wanting to offer over the home report, you must have that cash to do so. So you must have that cash plus your deposit and all of your legal fees. So this is something that can sometimes get people in a bit of a sticky situation. If you're wanting to offer £10,000 over the home report valuation, you must have that 10 grand in cash plus the amount of the deposit plus all the legal fees. So just work out your budget, stick to it. And this may mean that you have to change your strategy in the way that you're viewing properties, you're searching for properties, or how you even offer on the properties to ensure that you aren't overstretching in your budget. Have a strategy for buying, be flexible, and be open-minded. So some of the things that I always give tips, and these are things that I would say to my friends and family if and when that they're looking. If you're feeling like that you've been outbidded a couple of times at closing dates, or by the time that you finally see a property, you get organized to go around and do a viewing, the property's already under offer or sold. I know currently in the kind of Edinburgh market, or the kind of EH postcode, average time on market is about 21 to 23 days. So that can be quite quick. And that's from the day the property goes live in the market. Other areas, it's about 18 days. So again, that's not long at all. I've seen some properties go under offer 24 hours after the for sale board's been up. So it can be quite quick. If you are feeling like things are moving too fast and you need to maybe take it at a slower pace, or you're maybe just not prepared to offer some of the prices that you're seeing, being bid at closing dates, then maybe try to look at properties that have been on the market for a longer time. How do you see how long the property's been on? Well, on Rightmove, I know that they do have, Rightmove and Zoopla do have a note that says the date the property was actually listed. But if you also download or request a copy of the property's home report, if you check on one of the front pages, it should have a section on there that says date of inspection. That will actually tell you when the surveyor went out to the property. So if you're maybe deciding, you know what, let's actually see if there's properties that maybe are slightly above what I would ideally want to pay, but if I can get it for the right price, especially if it's been on the market for a long time and it isn't sticking, usually that's very price related, that is very price motivated, then download the home report, check to see how long the property's been on the market. And if it's been on the market for 6 months or longer, then the odds are that, there's probably going to be some flexibility in that price. So maybe if you're thinking that you're not wanting to pay over 150, but before you'd maybe been setting your pricing search at 145 and lower, maybe you should set it at 155, 160, and just see how long those properties been in the market, to see if there's maybe a deal to be done there. Another tip, you guys, and I can't stress this enough, is act fast. Don't wait for a closing date. I know we've all talked about a closing date. I know that is common. Everybody's a property expert in our industry. And I know that that's such a common thing that sellers say. And as Shawn said, a closing date is a seller's dream, but why are you waiting for somebody else to come in and be your competition? If you like a property and you see a property and you want to offer, my goodness, get in touch with Shawn, get in touch with Stephanie, work out your budget immediately after the viewing and submit an offer. Our conveyancing team and many other conveyancing teams, they can work at a moment's notice. You can email your instructions, you can phone your instructions, all of this. You can even submit an online inquiry form to the solicitor's office to submit your instructions about your offer, and they can action it straight away. We do normally, again, like to pick up on those questions that the information that Shawn's already given, such as we'd like to know a bit about your background. So if you haven't yet worked out a purchase consultation, please do so, or gotten a fee quote, had your mortgage agreement in principle. All of those are important to have. But if you get those steps right and you do what we've kind of recommended at the start of this seminar, then the minute you see a property, you will be able to act fast. Don't give other viewers the chance to build up that competition. Other tips, don't be shy. Literally ask those questions. When you go to the viewing, ask the viewing agent, ask the homeowner, ask everybody information that you're wanting to know about the property, ask about the area. Things that you can find out from a seller, which are really important, and especially in the current market, is find out why they're selling. Some people may not give you too much information because it might be a bit personal, but really it's to pick up on kind of keywords. Has that, because we are still in a pandemic. And what I found really is that a lot of people aren't wanting to put their property on the market if they have kids or pets, if they don't already have somewhere to go, because they might be concerned that if they put their property on the market very quickly, and what if they agree an offer very quickly and they genuinely have nowhere to go, and they might be, facing a kind of fear of being quote unquote homeless in 6 weeks if they sell really quickly. So these are always good questions to ask. Many people are trying to offer on their next purchase, but their offer is being submitted subject to sale. If that offer is accepted, a lot of times they are then considered to be in a chain. So they'll usually have a kind of deadline of how quick they need to get their own property live in the market and under offer. So if when you're at the viewing and you're asking somebody, why are you selling? Have you already offered on another property, or where is it you're going to be going? they might give you clues to say, well, we have offered, we've got kind of a 4 to 6 week deadline that we need to get our own property under offer itself. So that might be cues that, hey, listen, these sellers are motivated sellers. They might not be desperate, but they will be motivated, and they would seriously consider an offer that comes through, or they would be willing to negotiate on the offer. Work out as well when they want to move out. This is a big thing, and especially as Shawn had kind of picked up about buying a new build, sometimes those new builds aren't ready for months and months in advance, sometimes even 7, 8, 9 months in advance. So if you are a first-time buyer, maybe you're staying at home with family already, or you are in a rental property. But the fact that you can maybe say to those sellers, hey, listen, we're chain free. We have, we're entirely flexible on our date of entry. Maybe we're already staying with family or friends. So we would be able to give you that long date of entry so that you don't have to uproot your family, or you can spend one last Christmas in your home, or, picking up on these kind of keys. And that might just make the difference in which offer they do decide to accept, or, if they want to negotiate with your offer. Another tip is, again, let them know you're a chain-free first-time buyer, because that right now is very important, and it is worth mentioning. I touched on it just earlier. More recently, we have actually seen some sellers at closing dates maybe choose the second or third place offers rather than the top offer, because these lower bids are still very, very good offer prices, but maybe these are the first parties to submit their offer that are chain free, i.e. they're not subject to sale. And many times that is the case if those sellers have an onward purchase. So again, finding out the kind of background, you're trying to get that information and then feeding that information back to your solicitor when you're working out your kind of best strategy of what to offer if you are offering at a closing date, or even if you've seen a house that you love and you just want to offer, all of that works out. Another really good tip is try to view a property at least 2 times. And the reason I say that is because once your offer is accepted, you actually aren't allowed back in to view the property until the legal missives have been concluded. The reason that there's kind of no more viewings, it's actually no more viewings for anyone, but it's no more viewings because up until, as Shawn had kind of said, up until the missives are concluded, anyone can back out and there's no financial penalty. So it's really just to make sure that there's no reason for a buyer or a seller to back out of the transaction and for everybody to really reach that ultimate goal, which is to get a completion. Once the missives are concluded, you are allowed to come back and visit the property up to 2 times, provided that there can be a mutually convenient date and time, organized for the visit. Those kind of further visits are, again, to check that, measure up for furniture, measure up for curtains, little things like that, even sometimes to see the property, because it might be a couple of months since you originally offered. Your first viewing usually is always with your heart. So getting that second viewing, it just means that you've taken maybe a step back. You're trying to come in and you're viewing this, for the second time, maybe a property you really love with your head, and you're really taking your time to go back and look at the property. Looking at, the corners of the wall, are there any cracks? Looking at the ceilings, do you see any staining, which may kind of mean that there might be roof issues? Are you seeing anything, what about the silicone around the bath, the shower, little things like that. When you are there at the viewing as well, ask about the neighbors, ask about any communal works that may be scheduled. If it is a tenement, this is really important, because many times if you don't ask, we may not know. And so having that information will be really, really helpful. The home reports, I know that guys have picked up on it. I think these are really important, and especially it helps you guys as buyers just to really know what your options are. I won't go into too much detail about it, mainly just about the kind of overview. They were introduced in Scotland in 2008, really just to benefit property buyers, because before there was kind of this set threshold to kind of determine really what a property's value is and to give some sort of guidance to buyers about what to offer. You'd see properties that would be offers over 145 and they would sell at 250. And you're just thinking, how does that help you guys? And how does it help first-time buyers get any clue about what they need to offer? It was also brought about to prevent multiple surveys being done on the same property. So it was really just trying to regulate the market. The home report is made up of 3 documents. That's the single survey and the mortgage valuation report. So that's really, really of interest to both Stephanie doing the mortgages and Shawn doing the purchases. There's an energy performance certificate. So that's the really colorful graph that you'll see. This should be really important to a lot of buyers because this gives you more information about the ongoing or future costs of running the property. So it's really, really good to kind of figure this out. And then the property questionnaire. This is really good for you as the buyer and also for the solicitor. This is a section, this is the only section really within the marketing of the property that is completed by the owners. and it tells about the property since they've owned it. So they'll give information about, have they carried out any alterations? Have they had roof repairs that are major repairs? Have they changed any windows? Do they have guarantees in place? So a lot of that is in there, as well as kind of factoring information if you're buying a new build. There can be also additional documents uploaded with the home report. It's usually at the end called an appendix. They're really there just to give interested buyers additional information about the property. So these can be things like damp and timber specialist reports or guarantees. They can be roof reports, they can be invoices. And more recently, you'll pick up on EWS1 forms sometimes are attached to the back there. This is just a couple of pages just explained in the home report. Again, they're like a 50-page document. Why people want to read all of that, I have no idea. It is a lot of information, but you're mainly wanting to pick up on big things there, which is, the fact that the single survey section really tells about the property and gives a kind of overview of it. Then you're going into these categories. So the categories Shawn touched on them being 1 to 3. 1 means, hey, listen, everything's pretty good. It's in good condition. 2 means repairs should be kind of looked at, or there will be ongoing repairs. And a category 3 means that there is immediate repairs required. You're going into the mortgage valuation report, and this is really what staff would be interested in, Shawn. They want to know really what the value of the property is and any comments there about the mortgageability. You're then going in again, the colorful graph for the EPC. So using the home reports for a buyer. So the majority of the lenders will actually accept the mortgage valuation report within a seller's home report to authorize your offer of loan, even though it was actually ordered by the property seller itself. Some lenders are kind of a bit iffy on this and just say, hey, listen, for the buyer's mortgage application, we really actually want to get our own independent survey carried out just to make sure that the property is in good condition, it is how it says it is, and that's what the value is. If your lender is requiring your own survey to be carried out, the cost is usually the responsibility of the purchaser because the seller's already paid for their home report, and it's sometimes added into the fees charged by your lender. One of the things I would say is when you do submit an offer, if you are getting a mortgage, one of the clauses that Shawn would discuss with you about submitting the offer would usually be subject to survey or subject to the offer of loan being approved. And really what that means is you're really just trying to find out, because you can't really get your offer of loan until you find a property that you then get the offer agreed with, and then you submit the mortgage paperwork. So it could be 2, 3, 4 weeks down the line, once the property's under offer and the conveyancing is carried out, that you then find out that your lender needs to get their own survey done. So that's really sometimes what that survey clause is. Your mortgage advisor will be able to tell you whether or not the lender is likely to accept the home report, or if they maybe need to do their own survey. And so that's kind of just more information there. It could also be the case that maybe you as a buyer are just reading this going, oh, do you know what? Like, I really just would prefer to get my own survey done. You're more than welcome to do that. There is your cost to do it. Your solicitor would be able to give you advice on various surveyors that can come out there. It would need to be somebody who already hasn't done the home report for obvious reasons, but definitely you're more than welcome to get your own survey at any time. And many sellers would say, hey, listen, I'm not prepared to have somebody come in my home unless there's a reason why. So, because it is quite sensitive information in terms of the value of the property. So if you do want to get your own survey, we would need to have an offer agreed in principle, and then we can pick up there. What if the home report really mentions that maybe repairs are needed? Again, these are areas that can be picked up on. This should be things that you should be speaking with Shawn or any other solicitor to be asking their advice, saying, okay, well, if I'm reading on here and it says maybe a category 2 for a flat roof section on a traditional tenement, or any sort of extension maybe to a property, but it says on there that flat roofs have a limited lifespan. Should I get a roof report? Ask your solicitor. That's really what they're there for, to give you guys advice and give you information. And they can connect you and give you recommendation of trusted tradesmen or trusted specialists. As well, the same thing with a damp and timber specialist. Sometimes if you're on a ground floor or a main door property or even a basement, some solicitors may say, hey, listen, we would always recommend just to get it to make sure that you really know what you're doing, because in the current market, it is very much a buyer's beware. We have the home report surveys in place, but we have to kind of trust that, the contents of the report. So sometimes it is important to get your own. As well, for being a top floor tenement flat, some solicitors maybe recommend to get your own roof survey. Areas to pick up in the home report that I would definitely recommend that you check would be kind of dampness, rot, and infestation, settlement or structural movement in a property, just picking up what the surveyor's comments are on the home report. And if there is anything that you do have questions with, ask and they can assist. roof repairs, windows, and as well more recently, again, main walls for cladding or EWS1 form requirement. I will pick up on that. A good thing, and I think that this is such a common misconception, is everybody hears, oh, a home report's only valid for 12 weeks, or, oh, you need to get a refresh because that's a home report, or that's an old home report. That's not the case at all. The documents in the home report must be no more than 12 weeks old when the property goes live on the market for sale. So if you see a property that says brand new on the market, has a new tag, you download the home report, but maybe the home report's 4 months old, you should be asking questions. Why? Why is that home report so old? What's the reason? And legally, those sellers should actually have gotten a refresh of the home report there. There may be kind of timeline reasons of what the delay is, but that home report should actually be no more than 12 weeks old when the property goes live on the market. Once the property is on the open market for sale, there's actually no official expiration date for the home report. As long as it has never been withdrawn from the market for longer than 4 weeks, the home report can be months or even years. Hopefully that's not the case, old, and it is still considered valid for the purposes of marketing, because legally, in order to advertise a property for sale to the open market on the internet, with a for sale board, on anywhere, even in the newspaper, you should have a home report produced. And again, that can be, in terms of purposes for advertising, the home report can be years old, and you never need to get a refresh for that. But once an offer has been agreed, your lender really wants to see the most up-to-date and accurate assessment of the property's value and condition. So that's a lot of times when they come back and say, hey, listen, we need to see a refresh because the date of the inspection or the date when the surveyor went out is actually older than 12 weeks. So we want to make sure that when we are issuing your offer of loan, that it's most accurate assessment of the property's condition and value. Big things are who pays for the home report refresh. Now, usually it is the responsibility of the seller for the refresh. I've had sometimes, probably only 2 or 3 times, where there's been severe delays and it has been sometimes the reason of the buyer. Maybe they didn't have paperwork in place, or they didn't disclose information about their gifter's deposit and things like that have caused delays, and that has caused it to go over the 12 weeks. And so in those instances, I've had the seller say, well, listen, we're not paying for it. So in that instance, even the buyer did have to pay for it. The cost is about £120 to £150 plus VAT. So it's not a crazy bank breaker, but it is just an additional expense to be wary of. Okay, so we're picking up about this EWS1 form. If you have seen a property recently that you do like, it is usually on modern properties, like modern or new build properties, but you notice maybe that there's a category 2 or category 3 in the home report, which mentions main walls, or that the property may require an EWS1 form, but maybe you're not really sure what this means. I've turned into a little bit of the cladding queen. Last month, Watermans Legal actually hosted a free online seminar about cladding in Scotland. I'll make sure that we include the link to this. It's really helpful information. That's like a 2-hour seminar. So it is a lot, because there's a lot going on. It's just a brand new kind of ongoing and ever-changing situation. But basically it's the external fabric of the building. So there are sometimes specialist reports, this EWS1 form, that will be required. If you do see a property that is a modern build and you do notice that it has a category 2 or 3 for main walls and mentions about an EWS1 form, first thing to do is ask the agent, do you have one? Ask Stephanie or any mortgage advisor, hey, listen, I'm really interested, or I've seen a lot of the properties that are more modern and they keep mentioning these EWS1 forms. Will my lender need more information? What do I need for that? She'll be able to give you advice and guidance. So will Shawn or any solicitor. They'll be able to kind of help steer you through this. These aren't bad properties. They're actually really good properties. I say that because I personally own one that it has been affected by cladding. And, we've really noticed that as long as we're open and transparent with the information, there's no issues, and the properties are very much sellable. So little tips of the trade again. Submitting an offer or just submitting an offer at closing dates, should you offer quickly or do you have to wait to a closing date? And again, you never have to wait for a closing date ever, period. Through many areas outside of, or really throughout Scotland, it's still very much a seller's market. And when I say seller's market, that really just means that there's a low level of supply of good quality stock available for sale, and there's a large number of buyers competing. So for this reason, property prices have remained very stable, despite the fact that we have just experienced a global pandemic and we aren't even officially yet out of lockdown. I think that that's something just really amazing of how resilient the Scottish property market is. There are some areas that have lowered in terms of, prices or percentages achieved above value. And I think that that would just be anywhere, because you might just see, people leaving the tail end of last year. There was a lot of people wanting to get out of the city center to maybe be in a home so they could take advantage of the garden. But now as things are opening back up, city center living is becoming more important. So, it really just kind of fluctuates there, but it is still very much a strong positive market in terms of sellers market, which sometimes isn't a great thing for buyers. Just means you have to be kind of really quick, really fast, and really proactive. My recommendation about offering is just do it. Just do it. Generally what's the worst a seller is going to say is no. Best case scenario, they may actually say yes, or they may come back and say, well, listen, we won't accept that offer, but here we'll counter offer you, and we'll ask you, you offered 200 and they're wanting 215. They'll come back and say it. So how else would you have known that, they'd be willing to accept that unless you would have asked the question and offered? Again, many sellers may want to try to hold off accepting an offer early days, and they may want to try to generate additional interest. But in order to set a closing date, and I think this is so important for people to know, in order to set a closing date, there needs to be at least 2 formally interested parties that have registered. So, I've had situations where we've had busy weeks of viewings. It's been, 2 weeks, and we've had about 50 viewings, and I only have 1 note of interest. And a lot of that is because so many people assume that the property is going to be popular, and they'll just be notified once it goes to a closing date. But until I have those 2 people who have registered their interest, whether that's from a note of interest or an offer, I'm not able to do anything. So sometimes it's a little bit of like a catch-22 situation. So if you are interested, go and offer. Just get your interest put through and have that conversation. Set up that direct line of communication, and let's do it. Again, I think it's also important, as there's never actually any legal requirement for a seller ever to set a closing date, despite the number of notes of interest that they have. I've had situations where it's been 17, 18 notes of interest registered, and we were just about to set a closing date and announce one, and in comes a whopper of an offer, and the sellers have said, that's too good to kind of risk, not getting an offer like that again. So we want to accept it. And I've had to make 17 really awful telephone calls to solicitors, just explaining, unfortunately, we've accepted another offer and I've had to take my client's instructions. So, you guys have missed out. So again, it's just, sometimes it doesn't pay just to sit and wait. Okay, so this is something that I usually recommend at viewings, property improvements, and just trying to make smart investments. I think this is really important. It's hard to be inspired when a property doesn't look pretty in the photographs or in person. But from an estate agent's point of view, a lick of paint and some new flooring like carpet or vinyl can really make a world of difference with the property value and the perception of the value. I appreciate that there's probably a counter argument there saying, well, if that's the way that a buyer can do, why won't a seller do it? I understand. I list properties. I have that argument with them all the time. And sometimes sellers just don't have the extra cash to spend and to make even £2,000-3,000 for paint and new flooring. So, in those instances, take the opportunity, seize that opportunity, and just say, do you know what? If somebody else doesn't like it, I can see past all of this, and I can see, yes, they're really dark walls, but what if I painted them white and I just, put new skirtings or facings on them, and, I put new flooring in there. I ripped up the old ugly carpets and I put some new kind of laminate flooring. What will it look like? Genuinely, you'd be so surprised at what a difference paint and flooring make. When you're viewing a property, again, it's not decorated to your taste. Do not let this put you off. There's tons of extremely budget-friendly ways of adding immediate value to a property. Get onto Pinterest, get onto Instagram. There's tons. That's one of my favorite things to do, is to get on Instagram and actually follow some DIY or home improvement accounts. And there's some really fantastic ways. Facebook actually has some really great groups that you can pick up with and get ideas with. I think as well, when you're looking at the property and you're working out your budget and trying to stick to your budget, there's actually some really interesting cost-effective home improvement things that you can do now. Things that I would say is, do you absolutely need that new kitchen, or can you look at cost-effective alternatives such as vinyl wrapping? You think this is insane, it really is. But essentially, when your kitchen covers or your carcass of your kitchen is still really good and in really good condition, but maybe you just don't like the fronts, there's companies that can actually come in, and it's almost like really high quality wrapping paper, and they can actually just wrap your kitchen fronts or even the internal in a whole entire different color, and it looks fantastic. And it's like it's an eighth of the cost. It is really cost effective. You can even look at painting your kitchen cupboards, or even this also works in your bedroom wardrobes as well. There's some really good furniture paint called Frenchic. I've actually personally used that myself on internal doors and my wardrobes and my kitchen, and it's really, really fantastic. And I like actually seeing some of the different options that are available. As well, again, don't get into bidding war and overpay for a property just because it has a nice shiny kitchen or bathroom. Try to look at, if somebody's willing to pay £20,000 over value for that property, but you can see something that's maybe an equivalent size, but maybe that one's just been left because, the kitchen's 5-10 years old or the bathroom's a little bit dated. Why would you not just look at paying at valuation or under valuation and then putting in even half that cost and then making those improvements? I know it is hard, the idea of, because it's almost like a full-time job trying to get the contractors in and, kind of project manage the work. But if you're looking at it that way, you can immediately make a return on your investment, and you'd be really, really surprised at what options are available. This is my own personal glow up. I was trying to find something better, and as apologies, I went through a complete mental breakdown over lockdown and decided to paint my hallway in polka dots. It's insane, I know. This just gives you an idea about what is possible, and sometimes the transformation. So I just painted my front door. Yes, it's crazy. Little dogs there for you for just kind of cuteness factor. But really, that was only 2 coats of paint. It took me probably 3 hours, and it was all done. So I've actually even painted some of the the kind of door handles and the locks. So it's kind of gold. It's got a kind of golden green Wizard of Oz feel to it. And I think it really can just transform an entire space. So that 1 tin of paint cost me £11. So it's such a difference. And I think sometimes it's so much fun, especially when you're investing into your own home. So in summary, top 5 tips for first-time home buyers. Again, get professional advice and speak to your solicitor. I cannot stress this enough. We offer free purchase consultations. Take us up on that offer. If Stephanie and her mortgage team are offering you free consultations, if the solicitors are, take advantage of it. Use that time to really just try to find out as much information as possible. Second tip would be, what's your budget? Speak with your mortgage advisor. Really, really kind of work around what options they have available to you. Again, third, what's your property wish list? What are things that are so important to you that you must have? And what are things that you can kind of come and go a little bit on? Do your research and view properties, obviously digital, and you can view in person, and really kind of get in there. And then number 5, as Kirsty and Phil would say, on location, choose a proactive team to work with you. Choose a proactive conveyancer. Really make sure that you're having somebody there that's going to work hard on your behalf, and you're not just going to be one of 100 different clients they have. You really want somebody that's going to prioritize your case. What's really hard, I think, for first-time buyers is you kind of sometimes feel a little bit scared to ask these questions, or you're scared to kind of, chase up or follow up. Don't be at all. You are priority. You're still a client for us, and we want to kind of help you in any way we can. So that's the end of my presentation. What I'll do, again, if you guys have any questions, or if you ever want any kind of helpful tips, or even to be signed up to our buyers list or property matching service, please do let me know. I'm just as happy to help out there as well. This is not the end yet. We do have, obviously, we will send out these slides in terms of, providing you guys more information. We've got some helpful links here as well. Cara Mortgages, their website actually has some really fantastic first-time buyer and even purchase information there in terms of jargon busters, frequently asked questions, and again, their budget calculator. So please do definitely go in and have a chat with them. But I do actually want to pick up, and I'll pull up our chat, and I'm going to ask to unmute both of you guys. So what we'll do is we'll do our Q&A just now. I've actually got some really good questions that I'm excited to ask you. So I think, first of all, Stephanie, in terms of furlough, obviously we're starting to come out of it at the moment. How have lenders taken into consideration, people who have been on furlough or have had maybe their income affected some, and has this been a negative, or have they had to adjust their budget from there?
So it's, at the moment, if we're talking like current circumstances, there is limited choice with people that are still on furlough, or even on part-time furlough, flexi furlough. It's not impossible. There is a couple of lenders that are still absolutely fine in that scenario. So if you're not back at work, full-time just yet, there is still options and possibilities.
So it's best just always to get in touch with you guys to give full disclosure of your situation.
Absolutely. The criteria on mortgages is constantly evolving and changing at the moment, as you can imagine, just with the last year on what's been going on. So, you know, criteria can change quite frequently. So just get in touch so that we can guide you through on what the kind of current criteria is and how we can help.
Perfect. This may be one for Scott or Steph. How can a parent, so I know that we're talking about gifters deposits, is there something, or are these quite often or common that you can do a guarantor mortgage? Is that something that's really common now where the parents kind of help out with a mortgage?
I can take this one, Shawn.
Yeah, go for it.
So there is the likes of guarantor mortgages. They might be more commonly known as, now you can do what they call like a joint borrower, sole proprietor. So in circumstances of, you know, if mum and dad, you know, want to help out, you know, their kids to buy a property, then we can use, you know, mum and dad and, you know, children income, potentially even up to 4 people on an application. But then from a title point of view, we can just put it as, you know, the actual, you know, children that are living in the property on the title. So yeah, that can absolutely be done.
And I guess in that, when you had mentioned about the title, that would then come into effect, Shawn, that then they wouldn't be applicable for the 4% additional dwelling tax. Is that right?
Yeah, that's right. So the criteria for ADS, which is additional dwelling supplement tax, it all comes down to who's on the title.
Okay.
So yeah, if they're first-time buyers, obviously that won't apply. But if they do the mortgage a different way, whereby they're buying in joint name with the parent, then there'll be, you know, can be quite severe tax consequences for the parent if they go on the title with the 4% tax.
Kind of looking at that joint borrower, the sole proprietor, that seems like a really reasonable option, especially if the parents probably want their kids out of their house as quickly as possible, and they just need to find a way and an avenue to do it. Okay, so another one is, I've had a few questions always asked when we're doing viewings, or if people are wanting to kind of register their interest in properties that we're selling, is, can you offer on a property without actually having a mortgage agreed? So, you know, like what does the actual, can you buy a property? And I guess essentially Shawn picked up on it, but I don't know if you want to take that one, Shawn, or.
Yes, I suppose from a seller's point of view, there'd be more risk accepting an offer from someone who doesn't have their agreement in principle, because more could go wrong. They might not get the mortgage, and you might only find that out 4 weeks down the line, and then they have to remarket, and it's just such a waste of time for everybody. So I suppose that an offer could be accepted, but I think you'd advise your client to maybe think twice if there were other options on the table.
Perfect. Okay, and then Steph, one of the things that you'd picked up on is, when you're considering a fixed rate mortgage, what happens when you're 2-year or 5-year or 10-year? What happens when that time comes up?
Yeah, touched on it earlier. Once your initial interest rate is coming to an end, the Bank or Building Society will move you on to their standard variable interest rate. So that could potentially mean that your monthly cost is going to go up. So we strongly recommend that you keep in touch with your mortgage advisor so that we can review it about 6 months before it's due to expire, just so we can prevent you going on to a high interest rate and get a new deal lined up for you, you know, quite nicely at the end of that term.
Perfect. And still picking up on the interest rates, I know it's sometimes hard to kind of give this information or even just realize what it is, but what currently is considered a quote unquote good interest rate?
So, I mean, there's rates as low, I think I saw earlier today, get rates as low as 1.19%. So, you know, that's really, really low. But again, on the flip side of that, there can be rates as high as maybe 4 or 5%. Depending on how much of a deposit you've got to put in, that's going to determine the level of interest rate that you can achieve.
Perfect. Okay, there was another couple of questions, and I think the both of you kind of touched on this, but I think it's maybe important to give a bit more information. Are there any issues with money, with gifted money coming over from maybe family overseas or in the EU?
From our point of view, it just means that we need to ensure we have the money laundering sorted. So what that means is we need to get the ID from the person gifting the money, photo ID, proof of address, and evidence of the source of the money as well. If they are abroad, they will probably need to contact a local solicitor or notary public for them to certify the ID. So we'll have that on our file eventually, and then we'll want to know how the money was accrued or where it comes from. So it's kind of an extra step for us and for them, but yeah, it's not that uncommon.
Is it the same for you, Steph? Yeah.
Well, from a mortgage point of view, every lender has got slightly different criteria on that. Some might be not overly keen, depending on which country it's coming from, whereas others are absolutely fine as long as we've got enough evidence of where that's come from. So again, that's just subject to lender criteria.
Perfect. Okay, so again, reiterating, just get in touch with you guys, disclose the information. And I think that's something that I know even just from working in the behind the scenes that I hear amongst it is that, sometimes even oversharing is a little bit helpful because it really gives you guys the biggest picture, and, make sure that you've got a full, clear overview of source of funds and where all of it's coming from. Okay, somebody did pick up stuff that had a few more questions just about mortgages, saying if you have 2 jobs, again, a little bit of flexi work, can that affect your mortgage in a negative way, or will it be okay? Like if you're kind of working part-time, or, will that be an issue with a lender?
Yeah, again, I mean, it's different lenders will view that, differently. So if you've got someone that maybe has, a full-time job and then, a part-time weekend or evening role, there's some lenders that might even take up to 100% of that second salary that you've got. So it could be viewed as a positive. Again, there's other lenders that, depending on how long you've been working both jobs, they might only look at your main source of income. But there's definitely options to be able to take into consideration your total income from everywhere.
Okay, I've got one more for you as well, Steph. I think this is actually a really good question because, again, I think this is one that most people feel a little bit scared to ask. I'm not very good at numbers as well, and I use everything a calculator. But one of the attendees asked, if he gets a decision agreement in principle for £150,000, is his budget to buy a property, is it £150,000, or is it £150,000 plus his deposit?
Always plus the deposit. So the certificates that I provide for your agreement in principle will state the maximum mortgage amount. Then what you need to consider is, what can you add to that? So the certificate says this is how much that you can borrow from a lender as your mortgage. Then, of course, you're going to need at least your 5% deposit on top of that, if not more. The more, the better. Okay,
perfect. Okay. And okay, somebody brought up cohabitation agreements. I think this is probably going to be for you, Shawn. Do cohabitation agreements, does it slow down the process for buying? And would you also be able to give a rough idea of the costs involved for that?
Yeah, of course. So yeah, good thing to have put in place, something our family law department can certainly help you with. It'd be nice to have it in place before you get the keys and the purchase goes through. Not always possible, but it can still be drawn up post-purchase as well, as long as both parties agree. Because it's simply just a contract between 2 people, that's all it is. So it can be drawn up pre-purchase, post-purchase, and both will be completely valid. The other alternative might be to have a different percentage of ownership within the title. That's another way of doing it as well. And if things didn't work out, then if the property was sold, then somebody might get 60% of the free sale proceeds, somebody might get 40%. And in terms of cost, I suppose it depends on the circumstances and how much was actually going into the agreement, because there might be more than a property. So yeah, you're probably starting about £400 for one of these, and it could go up to a bit more than that depending on how much work was involved. But you can certainly contact us at Watermans Legal and speak to one of the family lawyers who will certainly be able to have an obligation chat about that one.
And do both parties who are signing this cohabitation agreement, would they both need legal representation, or can it just be done with both?
Yeah, good question. So We can only act for one side of the agreement, so one party. The other party is not obliged to seek legal advice. So they can just sign it if they're happy. However, we have to make them aware that they do have the opportunity to seek independent advice before signing. But if they sign it of their own free will without contacting a lawyer, then that's okay as well.
Perfect. Okay. I did see somebody that asked a question, and it was picking up in terms of offer trends. And I think this is probably something for you and I, Shawn. It's just saying, where have you seen offer trends in terms of like 3-bed non-apartments, so houses? And really, where do you see this going for the next 6 months? Do you see it going lower or higher, or in terms of like offer prices and what you're needing to offer over?
Yeah, the houses. So houses are selling really well, I think. I think they're doing, I think they've always done pretty well, to be honest, but it feels like if any area of the market is a little bit slower, it's maybe the 1 or 2 bed flats, very property and location specific, I would say. But I think houses are doing a lot better, probably because I think you mentioned it earlier, Tzana, that a lot of people are now, who are maybe in a flat, want to move up the ladder to the bigger property with the garden because they've been stuck in their flat for almost a year now, through lockdown, working there and not having any garden space. Maybe I've bought a dog over lockdown and desperately need a garden, which seems to be the case quite a lot of the time. So I think a lot of people are looking to buy houses and obviously climb up the ladder naturally. So I think that's why there's always quite a decent competition for 3-4 bed houses. And certainly that area of the market is popular and tends to go to a closing date, to be honest, particularly Edinburgh, Midlothian. Whereas the flats are still doing very well, but maybe not at the same level of the houses. And in terms of the trends, that's been the trend certainly since last summer, when lockdown began to ease a little bit. And there's no signs of things slowing down at all, because when you are offering at these closing dates for a purchaser, or if you're on the other side, sometimes you're getting 10 plus offers. Only one can be successful, so the other 9 or whatever are going on to the next one. So there's a lot of buyers out there for that range in that area of the market. So yeah, I can't see it slowing down anytime soon, to be honest. What do you think?
I would have to agree. I think, when travel opens up, or international travel, I think it will be a little bit, I hate to say ghost town, but I think people will just want to get away. They're tired of seeing their same 4 walls. And even if they're staying in a hotel in the same city where they live in, I think just not to cook their own dinner or wash their own dishes. I think that that's something just, we're all kind of so excited about just going and being other places. So you might see it take a little bit longer, but again, I touched on it before, that there's still such a disparity in terms of the stock. There's not enough stock to meet the level of demand. And as Steph pointed out, 1.19% as the lowest rate today. I mean, that's like they're giving you money to like just saying, please borrow from me and buy. And you're almost kind of silly not to kind of borrow from it. So with those kind of interest rates, it's really just trying to spur on the economy. So I think until you start seeing more options available for buyers, there's such low stock that, houses will still be a priority. And, as Shawn said, still many businesses are now offering this kind of flexi work from home, or, to kind of pick up after a year of lockdown when we've all been working from home. Many people will say, well, listen, if you don't need to come into the office every day, so why don't you work from home? And so a lot of people are actually having to extend their kind of homes, and they're needing that one extra room for a home office, or they're needing a box room, or they're maybe building an extension and they want to maybe do one of those urban pods. So these are all little things that, kind of help make a family home, or help make a home with 3 bedrooms. Before, a lot of professionals would say, well, listen, I can just do a 2-bedroom flat in the city. I think now professionals who maybe don't necessarily want or have kids at the moment are actually looking for 3-bedroom houses, because gardens, dogs, pets, and working from home and having a guest bedroom. So I don't see the trend going downwards at all in the next 6 months. I think if anything, it will continue to rise. In terms of percentages over valuation, they do definitely vary depending on the area. I've seen Christorfen last year that opened up. We had a couple that I saw that were selling at over £100,000 over the valuation price. And we're thinking, what? Like, it was just crazy. Some of those, again, were coming in and they were the top offer and they were subject to 2 property sales, but they were about £40,000 more than the second place offer. So it was just one of those ones that you're just thinking, gosh, that seller, you know, they'd be crazy not to just give this a chance and see if it all worked out. A lot of times it did. So it really does depend. I think when it's what we kind of call a well-attended closing date, I normally say anywhere between 7 and 12% above value. Kind of pre-COVID, you would sometimes see people saying, you know, between 7 and 15% above value. I think the year on market trend, you're seeing anywhere between 5 and 6% year on year increase value. So, you know, a lot of it depends. If you're going to a closing date, how many other notes of interest are there? If there's only 3, probably don't want to be stretching yourself 20% over value. And again, at the end of the day, when you're offering at a closing date, I sometimes say to people, what would you be gutted at if you found out you missed it? If you submitted your offer and you found out that, you know, you missed it by £5,000, would you be absolutely devastated? And if the answer is yes, then, you know, maybe it might have been worth stretching it further a little bit. There was another really good question. It was talking for you, Steph, about, because we will be finishing up very shortly, guys. So if you do have any other questions, please do still keep them in the comments and we will send them out to the experts. There's been some very, very good questions on here. It was picking up on lift purchases. And I think this might be one for you and me because it's actually, you know, going when they come to sell. So you mentioned about lift needing to get, well, let me just pick it up because I do have it. It said, sorry, where is it? A question relating to the equity schemes. You mentioned that the government will want their equity back when they resell the property. Is this only if you haven't paid the mortgage off yet?
So the way in which it will work is there is the potential that even though, let's just say that you took 40% from the government at the time of you purchasing, you know, every couple of years you could review that and potentially buy the equity back from the government at any time. You don't have to wait until you sell or your mortgage is finished. You know, like I say, you can purchase it back in chunks or in one go when you look to remortgage.
Perfect. I think in terms of and as Steph kind of mentioned, in terms of the sale side as well. So when it comes time to finish, big things that I think a lot of the lift scheme, they don't want because they're there to kind of help buyers get on the market. They're not overly keen on people buying the properties and then renting them out. I mean, you technically should be changing your mortgage. Is that right?
Yeah, I mean, if you were planning to use one of the government schemes, you know, to buy and then, you know, rent out the property at a later date, you must buy that equity share back before you're going to be able to rent. The government aren't really, you know, keen on allowing you to do that. The whole point is that you need that support from them. So rather than use it as an investment, you know, it's to be your main residence.
There. No, I think that's perfect. I know that when the market kind of crashed, they were kind of giving some allowances, but you know, it is definitely boomed back. And so one of the things that's always really important is that when you are thinking, hey, listen, it's now time to sell, I want to sell up, you do need to get in touch with the kind of after sales shared equity. There is an email address and it's usually in all of your paperwork when you do come to purchase, and you just need to let them know, hey, listen, I'm intending to sell. What are the next steps? What do I need to do? A lot of times they do ask you to fill out a form. They will also ask you to pay an admin fee. I have no clue what it is. I think it's couple £100, but they will ask you for that. And then when it comes time to market the property, because you do need to notify them of who your intended advertising agency is, they want a copy of the home report that's finalized. They want a copy of the brochure, and they also want to give approval on any offer that you accept. So they have to accept the offer because they are actually a part owner as you are. So it's always really important that, you know, in 3, 4, 5 years, if you have bought a property using Lift or any sort of purchase scheme, like previously First Home Fund or Help to Buy, they do need to be notified when you are wanting to sell the property. And this is really important to know from the outset because it just helps, again, picking up on those fees that we've mentioned. There are additional conveyancing costs that would be involved for the sale from that. So it is really helpful to have that there. And when the offer is agreed, we would normally, as long as it's over valuation, they're not overly kind of fussed about it. As long as, we can show them that, hey, listen, we've done the best and we've actually put it on the market for a reasonable time. This is the offer we've achieved. We would like to accept it. Is this okay? 9 times out of 10, they come back. If it's undervalue, they want full information and they want to know why. Why did we accept undervalue? Why do we want to do this? What's the timeline? Tell us all the marketing steps that you've done. So that's just something just to remember if you guys are looking at it and purchasing using a lift scheme or the kind of government purchase scheme. So we will be finishing up here. And I think I did have one more. There was one person that asked in terms of a kind of flexi work. I think this, again, we've got tons of questions for the mortgages for you, Steph, which I think is fab because this is probably the most kind of untapped area. Somebody was asking about kind of a flexi work with, working as a healthcare worker. So maybe they kind of set their own hours or they kind of have maybe a 0-hour contract with a company. Is this similar to being self-employed, or how would that kind of be affected in terms of being considered a desirable candidate for a mortgage?
Someone's like on a 0-hour contract, again, depending on what lender we're going to be using, we can concentrate on lenders that do have that niche for contract workers or people on 0 hours contract. You typically need to have a good amount of history doing that job. So if it was something that you just started within a month or two on a 0 hours contract, we're not really going to be able to see what the evidence of income is likely to be. So if you've been in a job for maybe a year or two, then that shouldn't be an issue.
Perfect. And I'm just going to quickly answer through because we've had some of these questions already answered in the speech in the presentation. So somebody had mentioned, is there an expiration for decision agreement in principle? I think you mentioned, is it 3 months, Steph?
Yeah, so 3 months. So provided there's no changes in your circumstances after 3 months, we can refresh it.
Perfect. And, in terms of, we did have somebody ask, if they're a first time buyer and they have been gifted cash, or they've got a substantial of their own savings, or they've got cash, is there maybe a difference in terms of what they normally offer? I would say, in terms of, I do the kind of sales side of it, and I go and do the viewings and I speak to the sellers. I would say sometimes no, sometimes just because you're cash doesn't always mean that it's the best offer. If somebody's getting a mortgage, they may be able just as kind of attractive as a buyer. Again, it's picking up that if you're cash, you're usually considered chain free. And cash also is cash in the bank. That's what I normally say. I had a solicitor one time tell me, no, we're cash. We've got a decision. And I'm like, well, you're getting a mortgage. That's definitely not cash. Like cash is going to the bank and getting £180,000 from the teller. So, those are kind of situations there. It does definitely put you in a very good position when buying, but as well, it may just also be worth looking at, trying to work with a mortgage advisor to say, okay, listen, if my cash only goes up to so far, is it worth me getting a small loan to kind of top up and make me a more competitive buyer, or be able to look at an entirely different, purchase bracket? So if I've got £180,000 in cash, is it worth me maybe speaking to Steph and seeing about getting a loan of £30,000, and that means that I can actually buy at a higher price bracket, or I can pay more. So there's definitely, if I can stress it enough, just get in touch. People have mentioned about, what are tips for getting in touch with solicitors or mortgage advisors. I would say that I know that we, the two companies that we've got here, Watermans Legal and Cara Mortgage Services, we act for all over Scotland. So if you are looking to buy a property here, get in touch. One of our team, the team at Cara Mortgage Services, or us here at Watermans Legal, we have knowledge for buying and selling all across Scotland. We would be happy to help. So you've got our contact details on here. Get in touch for a free consultation and a free chat. We'd send you through the fees. Yeah. So perfect. Well, thank you guys so much. This went on a little bit longer than I had anticipated, but these were some really good questions. So I really do appreciate it. We thank everybody for coming in. And like I said, we'll finish up here. We'll send everything across a follow-up email, and we thank you guys for your time. So thank you again.